Hurricane Imelda, along with Hurricane Umberto, are slowly churning away from the southeast coast. The U.S. has not been hit directly by a major storm so far this year. But in tonight's In Depth, Ash-har Quraishi reports homeowners are turning to a new form of storm protection as traditional insurers flee vulnerable areas.
On Oak Island in North Carolina, crews are reinforcing the roof on Paige Morgan's family home. When we visited, a Category 5 hurricane churned 200 miles offshore. A powerful reminder of the destructive storms she grew up with.
I would hear my mom talk about her childhood, and she can't remember a hurricane until she said she was in her late 20s. And I've seen 20, and I was born in 1990, so there's definitely been an increase of storms in our area.
The hurricane-resilient roof on Morgan's home is being funded by a catastrophe bond, a Wall Street-backed financing tool growing in popularity.
But beachfront homes like these, at risk from natural disasters, are becoming increasingly difficult to insure.
Insured property losses have soared from about $30 billion in 2015 to more than $110 billion last year. That's pushed insurers into hiking rates or even pulling out. And so-called cat bonds are emerging as a way to bring more capital into the market. Think of catastrophe bonds as a rainy day fund for insurance companies. If it never rains, investors walk away with their money back and a little more in interest. But if a disaster crosses certain thresholds, say a hurricane of a specific strength or a major wildfire, flood, or earthquake, that triggers the cat bond. Instead of insurers, it's the bondholders who absorb the loss. It's a calculation by financial investors made more difficult due to extreme weather related to climate change.
Has a cat bond ever paid out?
We have never had one of our cat bonds pay out. But
North Carolina Insurance Underwriting Association CEO Gina Hardy has been sponsoring cat bonds since 2009 and says cat bond proceeds are already at work, subsidizing the cost of resilient roofs like the one going up on the Morgan's home.
It is a very good investment because it's considered non-correlated risk, and what that means is whether the stock market goes up or down has no relation to whether or not a hurricane might happen or not happen.
Those bonds are also helping steady the risk on the ground in North Carolina.
If you're not prepared for something like this, you're taking a huge risk. I mean, I've seen families lose their whole house, everything in it with these last few storms, and they aren't insured. They don't have the right type of insurance. And it's a disaster.
It's a bond between investors betting against disaster and coastal communities that could mean the difference between rebuilding and being washed away. Ash-har Quraishi, CBS News, Oak Island, North Carolina.